And let me bring in Adena Friedman. Adena, thank you so much for taking time to be here. We wanted someone who is in the CEO job who had been in the CFO job, which you were at Carlyle. So it's really great to have you here.
Yeah, no, it's great to be here. Yeah, I actually had the chance to be the CFO both at Nasdaq and Carlyle. So two different environments, and it was it's a great experience. There's no doubt about it.
Yeah, so start with the data point that Anil was making. It's not just the ERP anymore. It's an explosion of data. How do you deal with that, and how do you find the signal in all the noise?
Well, I think it's a great question, and it is a great question for a CFO forum, because when I think about how we're organized here at Nasdaq and how we organize the CFO role at Carlyle, so really the CFO had from a corporate data perspective, really had the roll up of all that information to turn it into business metrics that allowed us to make the right decisions. And so, and it's become obviously more and more complex, because on the one hand, more and more of your data gets unlocked because you have the chance to move it into an infrastructure that allows you to manipulate it and find signals and find outcomes. But on the other hand, can be kind of overwhelming because it's all there, but how do you get it and harness it in a way that actually works for the company? So at Carlyle, actually, I was one of the CFOs where the CIO reported into me, and it allowed us both to sit together and say, okay, how are we going to modernize the technology to support an evolving CFO role and take the company public, because we were taking Carlyle public at the same time. And it was a lot of my time was actually spent on systems, a lot of it, in terms of really thinking through the corporate systems. And then at Nasdaq, we've been a public company for a while, so we had more well-formed systems, but we recently migrated to Workday for HR and finance. And so now we're saying, okay, what can we do with that in addition to the Salesforce data, in addition to the billing data, et cetera, to get more intelligence out of our information?
Adena, did you have a technology background as well as a finance background?
So I actually started at Nasdaq in 1993 as on the business side, writing product plans for our trading business, trading products, and then became a product manager of several trading and data products, and then became the head of our data products division, and then became head of strategy and then CFO. So because of the business experience I had running our data products and really honestly partnering very closely with tech on the trading and data systems that I was integrally involved in, I became very familiar with technology, but I'm not a technologist myself.
Yeah, and how would you advise replicating that experience for other CFOs who need the technological literacy to make this work?
Well, I think one of the great things about CFOs generally is they're very analytical. And they like to kind of unpack process and repack it, right? So that's frankly a core skill set that you find in a lot of CFOs. And when you think about what you really have to do as CFO is you have to unpack a process, a data process, and then try to figure out, okay, where does that data originate? How does it flow through the system? How does it end up where I need it to be and how do I organize it in order to be able to draw conclusions from it? So I think a lot of the skill sets that CFOs have are quite relevant to being the person who harnesses the data within an organization. So it's not so much that you need to know that it's in Java, or you don't need to know SQL. You might have people on your team who know SQL, but you have to know how to kind of unpack a process and repack it up in a way that gets you a different conclusion. And I think that's why the CFOs become such an critical role. And then on the ESG side, Allan, I think that's a great segue because today, I would say the IR director is suddenly being thrown into this role of having to gather up all this ESG data and provide it to investors. And they, again, are great communicators. Oftentimes, they often come with a financial background, but it's really the CFO who sits next to the IR director and says, okay, how are we going to pull this together? So in Nasdaq, we have someone in our finance team who's responsible for our internal ESG program because of the fact she knows where all the data is. Yeah. She knows how to pull it all together. And then we actually provide, we have a system called One Report that we use, but we also provide to our listed companies and any public company where it basically rolls the data up into a single platform and allows you to report it once, and then we send it out in all of the formats it needs to go to in order to reach the ratings agencies and the investors. So that's a new technology that has to be developed internally.
And obviously much more data than anyone has ever had to deal with before, but a lot of it is junk data. Is that just part of the core competency of the CFO to be able to determine what's valuable and what isn't?
Yeah, I mean, parsing through one internal system, we actually call it C3PO because we like Star Wars at Nasdaq, but that our CFOs created is basically a data intelligence engine. And so she's got, she's integrated into Salesforce, she's integrated into Workday, HR, Workday Finance, she's integrated into our billing system. And frankly, we're not as well-oiled a machine as we probably could be or should be. And so she's having to map data together, make sure like a customer name in one business unit, Salesforce might be different than a customer name in a different Salesforce instance that could be different than what's in our billing system. So the mapping of the data and then coming, as you said, which data elements are actually important so you have to start with what questions are you trying to answer? What decisions are you trying to make? Then you look at all the data and you have to make sure that you're parsing through it to say, let's stay true to the North Star and make sure we're really focusing on these questions and these answers and let all the other data go for a while. And as you start to ask yourself more questions and need more answers, you can pull in more data. But that's how we've approached the problem.
It's interesting. I've seen now a couple of reports that suggest the application of AI and machine learning kind of paused during the pandemic.
Oh, interesting.
Yeah, even some indications it went down a little bit. Does that make sense to you? I mean, do you think that's just because you had other things you had to deal with, or?
We didn't have that issue, but I think there are probably two reasons that could be. I hadn't read about that. One would just be prioritization, as you said. So if you're machine learning, we've talked about this before, machine learning takes a lot of teaching, right? So there's a lot of time you need to take to teach a system to understand what it's reading and draw the right conclusions. And you train it and you train it and you train it and train it. And then it starts to reach its own conclusions, right? Maybe during the pandemic, you chose to take those people and apply them to a more immediate need that the company had. That could be, maybe you realize, frankly, that all the models kind of broke in COVID. So like what you expected to be a normal course of business that a trained system could reach conclusions on, maybe it couldn't because the data was so different. Those could be reasons why they may have paused their activities. But we've been very, very engaged. So where we apply machine learning is on our market surveillance systems and our trade surveillance systems for our clients, where we try to root out manipulative behavior and train the system to find behaviors that we couldn't find through the human eye, as well as to train it to be better at identifying false positives. So that continued for us. We didn't have to pause that.
I want to ask the group I want to open it up to questions from the group in just a minute here, but if you could use the chat, if there are questions or comments or observations you have for Adena, just throw them into the chat. I'm keeping an eye on it. But I do want to ask you, Adena, you made the decision to require Nasdaq listed companies to demonstrate board diversity, which I guess is a kind of ESG metric. And there's been some pushback on that, particularly from the editorial pages of the Wall Street Journal. I wonder what your reaction to that has been.
Sure. Well, so just to level set what the proposal is first and foremost to provide transparency around the composition of the board from a diversity perspective. And it's based on how a board member would self-identify, would provide that information to the management team, and the management team would then populate an anonymized table that provides the composition of the board from a diversity perspective. That's the primary portion of the proposal. And then the second portion of the proposal is some goals that we've set for the companies listed on Nasdaq to try to reach within the next 4 years to have at least one woman and one underrepresented minority or LGBTQ member on the board. But the only obligation is that if you're not able to have essentially one and one, then you would explain why not. So maybe you've chosen a different form of diversity. Maybe you have decided to prioritize other skill sets on the board, but you would just explain to your investors why you're not at that state. And the controversy is, I think that there's been some view that is close to a mandate, which we would disagree with. It's not a hard mandate. It's a market-led solution that's really focused on transparency. And then I think that, and so, we've obviously been managing through those comments, but when you look at the record, because a proposal like this has to go to the SEC and get approved by the SEC, since we're a self-regulatory organization, and it's a listing requirement, then if you look at the record, 85% of all the comments that have come in have been positive. Almost every positive letter has been from the investment community or the corporate community, and as well as advocacy groups. But I think that we've had a lot of great support from the investment community and the corporate community. So we feel very good about the record, and we've explained all of our, there's a 44-page document that explains our rationale and answers any comments. So right now we're just waiting for the SEC to do their final review.
I have a question from Howard Ungerleider. Howard, you want to unmute and if it's a problem?
Hey, Howard.
Sure. Yeah, no, sure. Allan, happy to unmute. Adena, good to see you.
Yeah, it's good to see you.
I just put my support for your board disclosure comment. I think that was I appreciate your leadership, and I think it's the right direction for the country and for corporate America and frankly corporate world. But specifically, you talked about ESG. I'm just wondering, are you thinking about or evolving any plans for your listed companies for ESG disclosures? And then if not, there's so many different indices out there and organizations. I'd just be interested in your view of, as you look at the landscape, maybe not picking one, but who are the top 2 or 3 that you think are going to gain more traction?
Sure. Well, first of all, Howard, thanks for the support on the board diversity initiative. Really appreciate that. With regard to ESG reporting, I think that there's going to be a fair amount of government involvement in that discussion in the next coming 2 to 4 years. I think we should start by looking at Europe and understand what is coming in Europe. So the regulators are just now, I would say they're probably 2 steps ahead of the US. They've organized themselves within the EU. They've come to put forth essentially a series of questions and an analysis to evaluate mandatory ESG reporting for European listed companies. And so I think it's it's a very important thing for us to pay a lot of attention to, because if I were a US company that had operations outside of the US, and I were looking at a regime where I knew that some sort of mandatory reporting was coming, wouldn't I want to have one set of reporting obligations and not 2, 3, 4, 5, right? So to the extent we can start to shape and understand the European landscape, how much of that can then be applied to the US on a rational business-like way, then we should kind of evaluate that. But I think we should assume that the government's going to take a pretty active role here. And so therefore, Nasdaq, beyond the board diversity initiative, which we do believe, because we do oversee governance of public companies, that is something that we have a particular expertise in. I think that we'll be there to advocate for our companies on behalf of those listed companies in terms of how the government's going to take a look. So hopefully that answers the first question. And on the indices, they're the one that we obviously are a public company too. So when we look at which of the rating agencies do we find do the best job of really understanding us, I have to admit, I shouldn't give a winner or loser, but I have to say I think Sustainalytics does a pretty good job. I think some of them are more of a black box that are really hard to navigate, and that actually is a frustration as a public company. And I also think ultimately that will be to their detriment. So hopefully the more transparent agencies will win out.
Howard, thank you. Adena, thank you. I should have asked, my fault, Howard, to identify your company, but I suppose most of these people know Howard's with Dow, and we appreciate you being part of this. Robert Simmons also has a question. Robert, if you want to unmute and ask it yourself, if not, I'll do it for you.
Hey, thanks, Allan. Adena, I just had a broad question about cryptocurrency and what your view is on that. And so you can answer that any way you'd like, but also specifically, I'm curious what Nasdaq is thinking about potentially blockchain technology as a way to facilitate T+0 settlement.
Okay, sure. So with regard to crypto, let's just say that there are two iterations of crypto: the decentralized cryptocurrencies, and then the more centralized approaches to digital currencies. I'll call them digital currencies as opposed to crypto. Obviously, both leveraging the same underlying blockchain technology, but one being community-driven, community-created, the other being centrally created, potentially by a central bank or a central organization wanting to use the technology for commerce. So I think that, frankly, both have a role to play. And I think you are seeing more and more institutional investors and other organizations that are more than what I would call the traditional financial industry becoming more engaged in the decentralized community-based crypto markets. But there are a lot of pain points. If you look at the evolution of the crypto marketplaces and how you look at an end-to-end, how does it work as a retail investor? How does it work as an institutional investor trying to get and buy and sell crypto? Tons of friction, a lot of friction in the system today. So I think that it's got a lot of room to mature technologically, from a process perspective, and over time there'll probably be more regulatory oversight of the space, which will help it mature. My belief is unusually kind of counterintuitive, which is I actually think regulation could catalyze the crypto market more than slow it down, just because I think it'll open it up to more participation. In terms of the centralized digital currencies, I think that they will take longer to develop, but if there's a gov coin that ever gets developed, I think it will change commerce. I mean, I think it'll streamline a lot of bank to bank and a lot of commercial transactions. So I think it'll be pretty interesting to watch that too, but it'll take longer. And on the blockchain itself, and settling of trades, I think it'll be a long time before you get to T0 settlement in US equities. It's just, we trade 3 billion, we trade actually, 17 billion shares a day. We process 3.5 billion orders a day just within Nasdaq, and we're obviously not the whole market. In options, we're processing 40 to 60 billion messages a day. The blockchain is not quite ready for that. But I also would say that going from T+2 to T+1 is very likely. Going from T+1 to T+0 changes every element of the technology that underpins the markets. So it'll take a while.
Adena, we have two more questions, and they're not simple questions, and you have about 30 seconds to answer them.
Sorry. Okay, I'm not good at answering quickly. I apologize.
Mario Rizzo asks if cyber and privacy protection is keeping pace with a rapidly changing environment. And Barris Oren asks, how do you get ESG goals deployed to a broader organization?
Okay, so on cyber, cyber is one of those things where the best you can do is use the best technology that's available and constantly iterate and constantly evolve. And that's what we do. It is, it's obviously the most concerning risk that any company that has a big economic impact has. And it's one that we take extremely seriously, and we don't compete with each other around cyber. And we collaborate and we communicate with each other around cyber, because we all know that it underpins the foundations and the trust in the market. So that's an area where we are very, very active and collaborative, and we work closely with the government. I can't speak as to whether it's keeping pace, but the one thing I would say is that when you think about it from like cyber criminals, who, whether they're using the banking system to launder money or perpetrate fraud, they're constantly using the latest technology that's available to them. Always. Criminals they don't have any rules. They can use whatever technology comes along. So if you're a bank, then it's really, really important that you also get to use the best technology that's available to protect yourself. And yet, as a highly regulated organization, the banks often have a harder time implementing machine learning. And so that's an area that I think regulation needs to evolve to support technology and the ability to be innovative around protecting the banks and protecting against criminals. And that's an
great.
area that we're actively involved in from a technology perspective. On the last question you had.
You know what I'm going to do, Adena?
Yes.
Here, that's a perfect transition.
Okay.
It was a question about ESG, and ESG is in fact the topic of our next CFO Collaborative on August 11th. So Barris, if you come back and join us on August 11th, we will do a deep dive then and get
okay, that sounds good.
detail. Adena, that was fabulous. Thank you so much. You really covered a lot of ground very quickly and with great skill, and we appreciate you taking the time to be with us.
Great. Thank you all very much.